Welcome back. I'm here to present the 26th edition of our market outlook, stock reviews and detailed studies. Now we are going to talk about the Nifty. The Nifty, this is the first week after the double top has been confirmed. Double top was confirmed the week before, and throughout this week there has been up and down movements. Finally, what are we headed for? Are we headed for the double top projections of 18,250 to about 18,000 kind of levels, or we will continue to see the pullback where the Nifty is going to get past the 19,300 mark decisively, so that we can really see some continuation of the upswing. Whether the Nifty is going to move up from here or not, that is what we are now more concerned about. This is the pullback rally that is going on. It is basically a pullback corrective. If you look at the Nifty daily chart that is on the screen, you will see that both the 20-day and the 50-day moving averages are actually moving in tandem. The 50-day moving average closed at 19,450.47 and the 20-day moving average closed at 19,423. So this is the projection that there is likely to be a resistance coming between, say, 19,425 and 19,450. On the way up, Nifty will face this as a serious obstacle. And suppose if it were to move up from here, maximum that we envisaged initially, that was 19,550 to 19,600. That is the level that one can envisage at the moment. But first, it needs to take out 19,425 to about 19,450. These two moving averages are going to pose a lot of difficulty. It may actually see some kind of supply pressure coming in, and once it tries to move beyond 19,450, it will have again the similar kind of supply pressure, and up to 19,600 the supply pressure is likely to remain. Only if we see that the Nifty takes out 19,600 in a decisive manner, then we can say that there would be further rally. But the chances are very remote that that will happen, primarily because the two moving averages, the 20-day and the 50-day moving averages, are clearly suggesting that there is going to be a downward movement. While the 9-day exponential moving average has turned up, it has actually given a reverse skew, in the sense that it is turning around, but even this moving average is unlikely to take out those two, that is the 20-day and the 50-day moving average. Hence, if you have taken short-term positions, liquidate that around, say, 19,425 to 19,450 if those levels were to come, and if it goes beyond that, definitely book some profits around 19,550 19,600 level, because this kind of a double top pattern doesn't end in a small sweep down to something like below 19,000. I still believe that the projected levels would come and it would break down again below 19,000 mark. So at higher levels, you would do well to book profits. Now we are going to talk about the Bank Nifty. We are going to use the daily chart, and there we would study how is it performing. Bank Nifty, of course, has been much weaker compared to the Nifty or the CNXMidcap. So Bank Nifty, just see whether we are headed for any higher levels. Would the big guns like HDFC Bank can pull up a rally, or the bank nifty starts moving down? As it is, the continuous distribution that we see in some of the major private sector banks, that is still on. Let's see how things pan out. Over the last 3 sessions, it made an attempt to cross the 200 exponential moving average, and this time it has succeeded, since bank nifty has closed at 43,318. By virtue of that, it has actually crossed and closed above 43,236, the level of 200 exponential moving average. And above that, we have two moving averages, the 50-day moving average at 44,020 and the 20-day moving average is at 43,598, or roughly 43,600. So 43,600 to about 44,000 would be the major resistance zone for the bank nifty if it were to try to move up. This is, again, I would maintain my reading, my conviction that this is just a pullback rally, and this is a pullback corrective, and that pullback corrective would be through by the time it moves up to something like the 50-day moving average being retested at 44,000 mark. So 43,600 to 44,000 would be the range where maximum supply is likely to come. So if you have taken any long position, you would do well to get out of it by the time you see it trying to scale up to something like 44,000. Although crossing and sustaining above 43,600, the 20-day moving average, might become a tall order. But generally, I would say that there is a possibility that 44,000 might well be retested, but it is unlikely to sustain there, and it will come down again. And once it falls below the 43,236, that is the 200-day exponential moving average, wherever it goes, it is once it is taken out on the downside from above, the downtrend will resume. cnxmidcap is still in a correcting mode. Of course, the retail money that is likely to come in, since we are already into a new month and the first week, lots of this money comes pouring into the market. So how would cnxmidcap pan out on the first week of November? It's going to get a boost, at least initially, because this is the first week of the month of November, and the SIP money is likely to come to the market, and that would actually fuel some more rally in the mid cap and the small cap segment. Barring that, I really don't think that cnxmidcap will really make a sustainable move on the upside. One thing, however, I would like to remind you that a similar kind of rally had happened. The mid-cap and small-cap stocks did well between 2014, or rather 2014 to about 2000, early 2018. Mid-cap and small-cap stocks did a very good rally, very good bull market at that point of time. But most of the people actually entered during the year 2017, and after that, right from end of January 2018 to about March 2020, mid-cap and small-cap suffered a great deal. So similar kind of situation is likely to unfold once again, because this is how it happens, and this is the nature of the beast. The mid caps and small caps cannot possibly lead the market. So uh, what I would say is that again, this movement on the upside is giving you a chance to book profits at higher levels, because this is a pullback corrective. And uh, from the chart reading, the chart that is the daily chart that you see, I don't think, if it were to become very bullish this week, and this week is going to be the week after which the downtrend will resume again. And suppose if it were to move up by about 1,000 points from the 40,000 level to about 41,000, use that as an opportunity to book your profits, get you pare down your mid cap and small cap positions. Now we are going to do our stock reviews. This time we are reviewing quite a few stocks. We would have to see whether something is worth really buying. Is there any chance of bottom fishing? We would explore all that. Keep watching. Our first review stock is Z Entertainment. Z Entertainment, as you can see on the daily chart that is on the screen, it is one stock that has been moving up after testing the 200-day moving average on 26th of October at the moving average was at 236, 200-day moving average, while the low posted was 237. So only about 64 paise left to actually reach that 236.36. Anyway, after that, 6 consecutive sessions rather, it actually posted higher closes, and that is a very encouraging thing for a stock in a market that is now showing so much of weakness. Chances are that this momentum is likely to continue, and if it were to continue, then probably from 275, the last closing level, there is some resistance between, say, 282 and 285. And after that, if it were to move up further even, then 289, this was the high posted, uh, uh, not 289, it was 290.70. That level could also be scaled up by this, but I would suggest that this is a one-way traffic kind of a move that Z Entertainment is showing. If it shows some supply pressure between 285 and 290, if you are holding it, if you have bought it, then you would do better to book some profits. So at least in the short term, Z Entertainment looks good. Our second review stock is Naukri or InfoEdge. InfoEdge is the name of the company. Naukri is its code for the NSE. Naukri, we are referring it to Naukri because we use the code. Naukri has achieved a great thing, that is, it has closed above the 20-day, 200-day, and 50-day exponential moving averages. The 20-day moving average was at 404,153. The 50-day moving average was at 4235, and the 200-day moving average is at 4182. So all of these moving averages have been taken out, and it has closed at 4250. So it is showing some kind of a momentum. Now, if it were to take out the immediate high that was posted on 11th of October at 4309, if 4309 high is taken out, then Naukri can move further up, and there is some momentum, just like in Z. In this also, some momentum we can see. Next target level would be 4388. 43.88. I really don't think that it is going to get past 43.88 decisively. Even if it were to move up, I would still suggest that you would do better to actually book at least part profits anywhere between, say, 43.88 and 44.50 if it were to go to those levels. So Naukri looks good, and this week the continuation of the pullback, Naukri might perform well, but don't forget to book at least part profits in whatever upswing that you see in this stock. Our third review stock is a PSU. It's an oil PSU, oil marketing PSU. This is Hindustan Petroleum, HPCL. Petro is its code. HPCL has also given 6 consecutive higher closes after posting recent low, and that low was at 239, and it was again 26th of October. And after that, it has actually crossed all 4 moving averages: 9-day, 20-day, 50-day, and 200-day moving averages. All of them are now below its closing level of 257.55. The highest moving average close to it is 256.74, the 50-day moving average, and the 200-day moving average is at 256 again, and 253 is your 20-day moving average, and 251.91 is your 9-day moving average. Chances are that you will see 9 and 20 post a bullish crossover. That means there will be more momentum. Immediately it is likely to scale up to something like 262 to about 265, and beyond that, if it were to go, then 268 to 270, those levels can come in. And if those levels really come, at least book some part profits, because it has already shown 6 consecutive higher closes, and another 2-3 higher closes, you should book some profits, because this is just a pullback rally in the market, and there could be further selling after this coming week, the week starting from 6th of November. So you better be careful. Our fourth and final review stock is Infosys Technologies, or INFY. INFY is its code. I've chosen INFY as a review stock because here I would suggest that you exit from this stock even if you were to see a rally, because just look at the chart. Last day, that was 3rd of November, 20-day, 50-day, and 200-day exponential moving averages are converging at a level suggesting that we are now headed down. The 20-day moving average, 1419. 200-day moving average 1420, and 50-day moving average 1421. That means the 20-day moving average has actually breached both 50-day and 200-day exponential moving average, and all are sloping down. So this is just about a minimal pullback, and the maximum excursion that you can expect is up to, say, 1425 or so. If you get such levels, exit from the stock, or if you are a player in the F&O, you can think of selling it, and the target that you would keep is the minimal target that would be 1350. That is because 1351 was the low on 1st of November. That is likely to be retested, and once that gets taken out, then there is a major support around 1300 level. Even that could be scaled down to. Infosys among the tech stocks is very, very weak. So use any kind of rally to pair your speculative positions. Those who are long-term investors can also think of waiting to buy it. Those who want to buy it for the long term, they should wait at least 1350, if not 1300. That should be the level when one may contemplate buying for long term. Otherwise, it is now headed down. While initially you can see from 1390 to 1420 to 1425 kind of minor rally in the first couple of days of the next week, after that you will see it coming down because the three moving averages giving bearish crossovers, it will give its effect for sure because they are very reliable indicators, the moving averages. If you like my presentation, please press the like button, subscribe to my channel and share it with others. However, don't forget to press the bell button so that you get the recommendation or the notification from YouTube whenever I post a video. Now we come to our final segment, that is recommendations. Let's see, in such a market which is the indices are so fragile that they might even fall further, whether we have any opportunity to go long. I've chosen only one stock to give a clear recommendation, and that is Godrej Consumer Products. Godrej Consumer Products, after it started, it posted a peak in the month of July. On 6th of July, it posted a high of 1102. From there, it continued its downswing, and there was a low that was formed on 26th of October, the day when the Nifty posted a low. Most of the stocks posted a low, and this also did. After that, it has actually moved up considerably on the last trading session. It wasn't really performing that well. In fact, on Wednesday and Thursday, it showed weakness, but it has actually moved up after its results. The results were liked by the market, and accordingly, it has moved up. You can put a stop loss at 975 on closing price basis. That is roughly a 45 points from the current levels. And on the upside, I would say that over the medium term, because it has come down very slowly, it might move up also slowly. So over the medium term, I'm expecting it to scale up to something like 1100 to about 1125. So suffice it to say that you can have target levels of 1053 initially and 1081, and after that 1103. But if 1103 crosses, then you can see even 1125. So Godrej Consumer Products, you can buy at current levels of around 120 with a stop loss of 975 over the medium term. When I say medium term, I mean 3 to 6 months. Thank you for being with me. If you like my presentation, don't forget to press the like button, subscribe to my channel, share it among others, and also do not forget to press the bell button so that you get the notifications from YouTube whenever I post a video.